Good morning traders, welcome to another video review. Today is Monday 19th of the December 2022, the beginning of the new trading week just before the Christmas. So let's find out what is going on the Forex calendar today. We don't have too many very important events scheduled for release. Nevertheless, the key event of the day is the German IFO business data, business climate index, current assessment, and business expectations. All of these three indices, all of these three indicators will tell us a little bit more about the sentiment in the Germany. So please keep an eye on this data release. They might have an impact on the euro dollar. As you can see, they are scheduled for release in 10 a.m. Wages in Eurozone for the third quarter are scheduled for release at 11 o'clock. CBI Industrial Trends Orders are scheduled for release at noon. And then during the New York session, we got RMPI from Canada and then a bunch of data from the New Zealand. Westpac consumer sentiment and trade balance data. So pretty easy, light Forex calendar for today, with the key event coming from the Germany. So let's start with the technical analysis of the euro dollar. For our chart of the euro dollar is showing us that we are still moving above this moving average, but this recent candle here is not really that great. It doesn't look pretty on this chart. If we locate the high 1.0737, you can see it here. We can of course label it as a technical resistance, and just not that far away we can have this technical support located here. So let's concentrate on these two levels in our analysis for today. So what do we have here is, as you can see, very big pin bar, reversal bar made last week when the market was of course doing the Fed interest rate decision, and now we are looking to break below the 1.0595 technical support. Actually, some lows were made already, 1.0585, but that's only a 10 pip low. So if we would follow this path to the downside, there is a bunch of the technical supports we should take into the account. One of them is 1.0510. The other one is of course 1.0444. So those are the next nearest technical supports for the euro dollar. And if we take a look at the RSI, we can easily see that the euro dollar went towards the level of 45, which is pretty low in terms of the this drop from the extremely overbought market conditions. Nevertheless, it's still holding. It bounced and still holding above the level of 50, which means that we can stay in this zone below 1.0737, above 1.05. This is 1.0595 for quite some time. Right, so this consolidation here might be still in progress. There is no price or candlestick pattern except the big pin bar on this for our chart. Nevertheless, it's worth to mention that we have a bearish engulfing after this 12 hours rally. Then we have a bearish sandwich, and the confirmation was made after this bearish sandwich were made in form of this candle here, and this candle made a new local low. So bearish pressure is still visible. However, as you can see, the momentum is now trying to go back above the level of 50. So as I said, be prepared for market whipsaw trading on the euro dollar, up and down, up and down, up and down. There are some data from the New Zealand. So let's take a look at the New Zealand dollar to the US dollar 4-hour chart. We will switch the 4-hour chart into daily because I want you to see what is going on here. In the perspective, what do we have here is the high from the last year. This is last year's high, and then we got the series of the lower highs and the series of the lower lows, with the overall market most likely trading below 100 days moving average, labeled in blue. When we got towards the level of, let's say, let me just put like, I don't know, horizontal line for the support. When we got somewhere around 0.55, that was the point when the bears said, okay, that's enough. Extremely oversold market conditions, we are going up. As you can see, momentum followed this movement up, and recently we hit overbought market conditions. So where is the local high? It's somewhere around here, to be honest, 0.6463. so this is the level of the technical resistance. It was violated slightly. Nevertheless, please notice that this violation was made during the extremely overbought market condition. Of course, it's not that obvious to see any kind of a pattern here, candlestick pattern. Nonetheless, the momentum is still strong. The momentum still stays around the level of 60, to be honest. The market trades above the 100 days moving average, which is still important. And if we take a look here at this very short-term trend line, you can see that the market is still above the short-term trend line, 100 days moving average, and is trying to break above the August 12th high located at 6,463. So if they break it, if there is a daily candle close above this level, we have a confirmation that the last high was broken and that the trend might be reversing. So we have the confirmation of the trend reversal. So from downtrend, V-shaped, very long in a time measure, V-shape above the 6,463. So the next target, of course, would be the next swing high, and which is somewhere around here. So that would be the next target, 6,573 pips. All right, so please keep an eye on this area. Keep an eye on this area because it's a very important area and might bring some interesting information regarding the future of this bounce. All right, after this area is violated. So right now, New Zealand dollar doing good, trying to break higher after this rally is, of course, done. Let's take a look. The last market we will take a look is crude oil. This is a daily time frame chart to make to look at the things in the perspective. So what do we have here? As you can see, is of course the last high, 129.72, lower high, and then this breakout to the downside. I guess that's still the one of the most important levels here on this chart is around here, around 93.52, because it was tested so many times that there is no doubt plenty of the traders seen this level. Technical resistance, it was violated 3 times. Nonetheless, new lows were made, then rejected, new lows were made. So it's clear that the market participants right now prefer lower prices of the oil, and it looks like we are going towards the level of 63.43. This is the next technical support for the crude oil. Let's take a look a little bit about the current situation. What do we have here? Of course, we are trading below 100 days moving average. That's a very important information, and this movement to the downside looks very well organized. So bounces are very short in time, short in the area as well. The local technical resistance, as you can see, is located around this area here, between 82.61, 82.50. So last time this zone was rejected, of course, and then new low were made. So next target, if the local low located at this level here, $70 is violated, then of course next target is 62.50. For bulls, we need to break above 82.50, okay, to continue the up movement. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.